Equity Mate.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Welcome to another episode of Equity Mates, a podcast that follows our journey of investing. Whether you're an absolute beginner or approaching Warren Buffett status, our aim is to help you break down your barriers from beginning to dividend. My name is Bryce, and as always, I'm joined by my equity mate, Ren. How are you going?
I'm very good, Bryce. I'm looking forward to this episode. Yeah.
That's good.
Can't wait to get in.
That is very good.
No further updates.
So last year we decided to go full-time with Equity Mates so that we can bring you better content more often across more channels. It was a huge leap for us, but it's thanks to you, our amazing community, that we could afford to do this. A huge thank you to everyone who has already supported us through our support page, equitymates.com/support. If you are keen to support, please head there and you can leave a little bit of a donation or a recurring payment. But we just wanted to give a shout out to the first 5 community members from Equity Mates who have supported us. So a massive thank you to Sally, Robert, Carlos, Stuart, and Liam. You were the first 5 who graciously supported Equity Mates. So a big thank you. This year is going to be a big one for us, and we're hoping we can keep creating the content that we are.
Yes. Yeah. No, thank you guys, and thank you to everyone else who has supported after. And yeah, we really appreciate it, and we can't wait to bring more Equity Mates content.
Absolutely. So that's equitymates.com/support. We also will be hopefully getting some cool merch soon.
Oh, let's not make promises that we can't.
Fingers crossed. This
podcast has become a graveyard of promises.
I know.
Well, I mean, some of them eventually play out.
Eventually. Yeah, we're here for the long term. So we talk about long term. I didn't say when the merch would come. It depends what our time horizon is.
Yeah, and also we might be loose on the word cool merch.
True.
Neither of us, we're quickly realizing in 2021 how poor our design skills are. There's been a number of moments where we've been like, we can't draw.
We need help.
We're not creative. Hey, but that's why we're in finance.
That's why we're in finance. So, Ren, I kicked off a segment last week called What The? And it's obviously worked because you've come this week with a What The?
I have. So let's play the intro here. What the? Now, everyone followed GameStop.
Yes.
If you're listening to this podcast, I'm pretty confident that you were aware of the short squeeze that happened. Well, the saga isn't over yet because someone is now suing the guy that started it all. And no, it's not one of the big hedge funds that lost billions of dollars and had to be bailed out. It's just some random dude who lost a whole bunch of money.
Idiot.
He's now selling. The YouTube handle is Roaring Kitty. The Reddit username was Deep Effing Value. This guy who sort of figured out what to do and got everyone on Wall Street Bets and across the world to follow him into it. There's this random dude in Washington State who's now suing him because he lost at least a few $100,000. So like a fair bit of money, but it's like, dude, you can't sue him on the back of that.
No. It's classic America.
Yeah.
Wow, that is a bit of a what though, because I don't see how this will play out in favor of the guy who's lost a heap of money. But, the stock market is a risky thing. He took a risk and he lost out.
And I don't mean to be cynical, but the Roaring Kitty made like $50 million if he sold, but he made a fair bit of money. He's going to lawyer up.
Big time.
He's got the money to lawyer up now.
If he sold. So, speaking of the United States, today's episode is all about 13 Fs and who is buying what. If you're a bit confused by what all that means, we will dig into it a little bit shortly in one moment. But I just want to make mention of a segment that we're doing in all of our expert interviews at the moment and also across our socials, and that is the Fund Manager of the Year, FUN in capitals, because it's a lot of fun.
As we said, we're not creative, and this is a Bryce Lesky special.
We just want to be tracking all of the fund managers and expert investors that we speak to week on week. and giving you guys the opportunity to actually participate in, I guess, voting for who you think was the best interview for throughout the year. So if you keep an eye on our socials, each week you'll be seeing that we put up a post of who the fund manager was, a bit about their bio, some of their favorite stocks or their watch list that we spoke about, and some of the favorite quotes that Ren and I got from the interview, with the idea at the end that we can present one of them with the inaugural Equity Mates Fund Manager of the Year. So please do keep that in mind when you're listening to the podcast as to who your favorite fund manager was.
And with the idea that in a few years, we're long term here.
Long term, yeah.
When you just headbutt the mic.
I did headbutt the mic, yeah.
The idea is in a few years, when the fund manager of the year is the biggest award in finance, we'll have a black tie gala dinner where all the equity mates can come, and it'll be like the Oscars for finance.
It's going to be so big. Ren will be hosting at his place, and it's going to be amazing. So it's going to be up to you guys, though, the community, to make that happen. So please keep an eye on our socials and keep in mind who your favorite fund manager was, and we'll vote throughout the year, and then present them.
We'll probably
vote
awards at the end of the year, to be honest.
Yeah.
Let's not make more work for ourselves.
So before we kick into it, very quick word from our sponsors, and then we'll get stuck in. So Ren, as we said, the title of this episode is Who's Buying What? An Introduction to 13 Fs. Now, if you are purely investing here in Australia, then you've probably never heard of 13 Fs before.
I would say most people, well, a lot of people investing in the States haven't heard of them either. But they are a little life hack.
They are a little life investing hack. So what are 13 Fs?
So any fund manager in the States, or maybe anyone that's just investing in the States, but definitely all the big US fund managers, anyone with over $100 million in assets under management, they have to file with the SEC, the government regulator over there.
Securities and Exchange Commission.
Yes. That they have to file quarterly what they're holding, what they're investing in, and then that's made public.
And so the 13F is the name of the report that they file quarterly.
Exactly. And so we as everyday punters can go online.
Investors, we're not punters.
True. That is a good call. We as everyday investors can go online and see what some of the biggest investors in the world are holding. And, it's a great way to see what... we obviously can read all their quotes and their books and stuff, but then you can see what they're holding, so you can see how what they're talking about aligns in reality with their strategies. And you can find, I've found a number of companies that I never would have heard of. It's just a really cool way to sort of get an insight into what's going on. Yeah,
a lot of people, particularly smaller fund managers as well, use them to sort of see where the smart money is going. If Warren is continuing to buy Apple, or if George Soros is still incredibly long the British pound, or whatever it may be, or short the pound, whatever he was. These are an excellent way to get an understanding of what these big fundies are holding and where they're at in terms of building a portfolio. But I think the surprising thing, and we'll get to it a little bit later on, is that you think there are these amazing whiz investors who have come across all these companies we've never heard of, but some of them are holding portfolios that look very similar to you and I, Ren.
Now, I know that these are only fund managers that have over $100 million. So they because they've got so much money, they really have to invest in the biggest companies. But it just dispels this idea that the only way you can make money is by specky silver stocks and mining explorers and unheard of biotech companies that have grand plans to take over the world. Like, don't get me wrong, people make a lot of money in that space, but these major fund managers aren't digging up names that you haven't heard of most of the time. The recurring companies are the Microsoft, Apples, Amazons, but also just like Chipotle, Hilton Hotels, companies that are everywhere.
Facebook, Amazon, Microsoft.
Yeah. So, Walmart features, Home Depot, like companies that are Procter and Gamble, like big companies that everyone's aware of, a lot of us use or have used in the past. And so for me, that's something that I'm like, it's worth taking that away when you're looking at these.
Yeah.
That,
you don't have to be breaking yourself to find the next 10 bagger.
Yeah. Well, yeah. I think also the next 10 bagger may be a company that you are more familiar with than you think.
Yeah.
Yeah. But before we get into that, so we've pulled out a bunch of the most famous investors in the world and some of the biggest things that they're holding, and we'll go through them. 2 points before we do that. First of all, a word of caution about these 13Fs.
Yes.
And then secondly, where we can actually find them.
Yes. So a word of caution. Firstly, the SEC recognised that the reliability and accuracy of these filings is somewhat dubious, given that no one actually analyzes and scrutinizes these reports at the SEC, which I find completely bamboozling. What was
Bernie Madoff?
Yeah, Bernie Madoff, who is perhaps one of the greatest fraudsters in financial history, was involved in markets for 20 years or something crazy. And
for people unfamiliar, it was just a giant Ponzi scheme. He would bring in new investor money to pay out investors that wanted to cash out. He was seen as one of the best investors on Wall Street, but he was just a Ponzi scheme.
Massive Ponzi scheme, filing 13 Fs left, right, and center according, as he should, telling everyone what he's holding.
Yeah, every quarter.
Every quarter. This is what's in my portfolio. Total lie. And yet no one's picked it up. So it's one of those, which I find absolutely astounding, to be honest.
This is a
bureaucracy.
This is a long-term structural problem I have. And
This is not a political
I'm not going to get
podcast.
into it too far, but this, just to give you an idea of how undermanned the SEC and the Department of Justice in the US is, because they've just been gutted for funding for decades. They have publicly said that sometimes they release press releases saying that they're going to be closely watching a certain area of the market or a certain type of conduct, knowing full well that they don't have the resources to do it, but just hoping that the press release scares people into not doing it. Like, that is publicly stated.
That's ridiculous. That's ridiculous. So yeah,
and if you want to read more things like that, that was a Thought Starters article about 6 months ago. So sign up to Thought Starters.
So you've got to take everything that comes in these reports with a grain of salt. At the end of the day, a lot of the fund managers, I'm sure, and I'm not accusing any of them, but would like to try and keep, some of their portfolio or IP a bit secret. But anyway,
I think there's enough scrutiny that for some of these bigger ones, like I'm sure there's some people that
hiding away what they're doing. And secondly, if you're thinking of using this as a way to make your own investments, you've got to remember that these reports are filed usually up to 45 days after the end of the quarter. So if they've made investment decisions, either buying or selling during the quarter, and then they're reporting it, and that report comes out 45 days later, then, whatever has occurred during this, that quarter plus the 45 days, their reason for buying or selling may have been fully baked into the price of the stock by the time it comes to you actually making a decision for yourself. So there's a big lag on these reports, and just because it says Buffett's buying another $1 billion of Apple, the price has probably jumped on the news of doing that and the fact that he's put $1 billion in, and you want to just be aware of that.
Yeah. The a quarter's 90 days.
Yeah.
Plus another 135 days. It's more than a third of a year.
Yeah.
So there can be a big time lag. But also, never blindly follow anyone into a trade.
Yeah.
A mate at a barbecue, 2 idiots on a podcast, or a $1 billion fund manager who's printing what they're holding. If you don't do your own research and you don't understand the companies you're buying, you probably shouldn't be buying companies. You should be sticking to ETFs and managed funds and stuff like that. So it goes without saying that you've always got to do your own research. This is just a great starting point to build a list of companies.
And what these reports also don't tell you is the reasoning why these companies are buying or selling. It's purely just this is what they held and this is what happened. Yeah. So you have no idea the reasoning for what these companies are doing. But Ren, where can we find them?
Yeah, so primary source, the SEC has a database where you can read them all. Edgar database, is that right? So if you go on the SEC website or if you Google that, you can come across it. But there's a bunch of websites that then take this data and try and make it more digestible. I don't think anyone's nailed it. So I think if someone was looking for a business idea in finance, I think there's definitely a better way to present some of this information. But there's a bunch out there. Holdings channels, Whale Wisdom, a bunch more that take all this 13F data and then publish it on their website for people to look at. You can if you just Google 13F filings, there'll be heaps of websites that come up that tell you about it. So the information is there, but yeah, any budding fintech entrepreneurs out there, hit us up because maybe we can collaborate on doing it better.
True. Yeah, look, I was digging through the Edgar database and knowing obviously the funding situation over at SEC, I'm telling you, it's not an easy website. It's not an easy website to navigate.
Maybe that should be our first political campaign, #fund the SEC.
And what it doesn't tell you, what the reports don't tell you is the change in position. They just file what they're holding. So to your point,
okay, so they're the secondary websites.
Yeah, that's where you need to
do
go.
the maths. Yeah.
You need to go to the secondary ones to find it. So before we jump into, I guess, the more interesting part of this episode.
Yeah, we've kept everyone in suspense for so long, but before we actually tell you what some of the biggest fund managers in the world are holding, you're going to have to sit through another ad break.
Okay, Ren, so who's buying what? We've pulled out some of the biggest hedge fund managers in the world, some of the biggest investors, and some of the ones that we're interested in, and pulled out their top holdings.
Yeah.
And we're going to, chat about some of them. To
put a timestamp on these, most of these are from the final quarter of calendar year 2020. So the quarter ending the 31st of December 2020 is when these were filed. So, we're recording this on the 18th of February, and they're already, 6 weeks out of date? But still, they're a great insight. Let's start with the big dog, Warren Buffett.
Yes, can't go past Wazza.
Yeah. Now, 5 biggest holdings. Apple, number 1. $117 billion of Apple. Bank of America, number 2. Coca-Cola, number 3. American Express, Kraft Heinz.
Still pretty old school, isn't it?
I know, very old school. But
except Apple.
All companies that you recognize. The thing that really stood out two things that stood out for me. First of all, he's holding in Apple, $117 billion. His next biggest holding, $30 billion.
Yeah, and I mean, for a guy who said that he wasn't interested or didn't understand technology, it wasn't in his circle of competence.
Let's not get into is Apple now a consumer product and is it a brand moat, not a technology moat?
I wasn't going down that path. But no, he took some pretty big positions back in 2016 and or 17. And yeah, it's obviously paying big dividends.
Literally. Yeah. The second thing for me is that he sold 57 million shares of Apple.
Trimming nothing.
Yeah, taking a bit of profits off the table. Yeah. Still holds, still has the majority of his position held. But anyway, we've got a lot of fund managers to talk about, so let's not get bogged down. What was one that stood out for you?
I can't go past Bill Ackman.
Yeah.
So he's Pershing Square Holdings.
Not least because we're trying to get him on the show.
Trying to get him on the show. If anyone has his number, please let us know. What I liked about Bill's is that it is very concentrated. Very concentrated. You look at, for example, George Soros, and he's got about 40 holdings in there. Bill has 7 holdings. He's got Lowe's, Chipotle Mexican, Restaurant Brands International, the Hilton, Agilent Technologies, Starbucks, and Howard Hughes. That's it. 7 stocks, incredibly concentrated. So he's obviously got a high conviction on a number of these stocks.
And for people unfamiliar with Restaurant Brands, they own Burger King, Popeyes, and Tim Hortons, so 3 fast food joints.
So either he loves fast food because he's got Chipotle and Restaurant Brands, or he's seeing something that is exciting him in this space.
Yeah. I don't know what we'll have to ask him when we get him on the show.
True, we will.
But yeah, again, just very standard brands. Lowe's, everyone is familiar. Chipotle, everyone in the States will know. Burger King from Restaurant Brands, another big brand. Starbucks, Hilton Hotels. Not companies that are sort of outside our circle of competence,
Yeah,
not
yeah.
not like, crazy biotechs that he's got like 30, PhDs in his office, doing all this complicated stuff. It's like these are companies with pretty obvious moats or
Yeah.
strong economic positions that aren't beyond aren't beyond us or everyday retail investors to analyze.
The other thing that I found interesting about his portfolio for the quarter ending December 2020 was that any moves he made were all a sell move. So we were running very hot into December. So either he's keeping his portfolio, balanced, or he's just trimming profits. So no buying action for Bill leading up to December, just taking some profits from the companies that he does own. So what else, Ren?
Steve Cohen, the owner of the New York Mets, the subject of the book Black Edge,
Yes.
and the guy who had to quit Twitter because he was trolled by GameStop supporters too much. He runs a fund, Point72. His biggest holdings: Alphabet, Facebook, AMD, Advanced Micro Devices, Visa, and Microsoft.
Again, nothing surprising.
Companies that, we either hold or that we've spoken about on the show. I'm sure most of the Equity Mates community have looked at or have heard about. Yeah, just obviously, holding those 5 companies for the last few years would have given an incredible growth.
Yeah.
But it's kind of reassuring in a way.
Yeah, it's like, hold on, why aren't we billionaires? Speaking of billionaires, everyone should have or may have heard of Ray Dalio. He runs Bridgewater Associates, the biggest hedge fund
Let's
in the world.
call it on the should have.
Should have, yes, should have.
No. Let's call it on that.
You mean you should have heard of him?
No, I'm saying don't tell people what they should have heard.
Yeah, that's why I said or could have. Ray Dalio, he's written a number of books and is obviously very well regarded in the investing community.
Founded the biggest hedge fund in the world.
Yeah, and has written Principles, which I would recommend reading. But look, Ren, this is a very interesting portfolio, and if we were talking about reassuring, this is reassuring.
Honestly, if I was an investor in his hedge fund, I would be
spewing.
Yeah.
Well, you're paying fees.
Well, hold on. Tell the people what's in it. Don't hold them in suspense.
So, his portfolio, his largest holding is the SPDR S&P 500 ETF. Then he has the Vanguard International Equity Index ETF. Then he has a gold index tracker, SPDR Gold. And then he finally gets into some single stocks, closing it out with Walmart and Procter & Gamble. So you've got 2 retail and FMCG companies there. But really the top 3 holdings and what you would be paying fees on for him to manage is essentially 3 ETFs, which I think is pretty phenomenal, really. He have one of the world's most regarded investors, and his top 3 positions are ETFs. So Ren, if he can do it, we can do it.
So I think the thing that we didn't mention above that is worth saying is if you own this was really only American stocks.
Yeah.
So like we joke about the S&P 500 index being his biggest holding. He may have a bigger foreign holding.
Yes.
Yeah.
Yeah. But still, regardless, American's one of the biggest stock markets in the world.
Yes.
He's got plenty to choose from, and he's choosing the ETF that follows the S&P 500. So he's obviously pretty bullish on what's going to be happening there. Any more from you, Ren?
Yeah, I've got heaps. How long have we got?
Not enough time for you to talk.
So one that I have looked at for a few years now. Seth Klarman, author of one of my favorite investing books, Margin of Safety. He has a portfolio with stocks that are a little bit more surprising, but for me, the thing is that he doesn't change his positions much. So eBay is his biggest position, and it's been his biggest position for a while. Then a few other companies that I'm less familiar with: Liberty Global, Intel Corp, Cuavo, and Fox Corp. But I was looking at it, and it just I was getting flashbacks because some of those companies have just been the same in his portfolio for a while. So I think the other thing that I start to realize when I look at these 13Fs is the time horizon, they report quarterly, but the time horizons that they hold these investments is generally a lot longer. And so you can, you start to get a feel for the pace that these guys invest at.
One for me, Ren, George Soros, and I like this one just because it's got Palantir in there. He would have done he would have done incredibly well off that. It's unchanged and also up about 100 and something percent since launching its IPO. He's obviously very bullish on the housing market in America as well that has been firing. He has a huge holding in D.R. Horton, which I had to look up, and is one of is America's largest home builder. So, interesting from George there. But as I said, the biggest standout for me from him was just the size of his portfolio, 40 or 50 holdings, pretty massive.
The thing is, they may run multiple funds within the holding company, and so it's not like all of those stocks may be held under the same strategy. It might be multiple different things.
Yeah.
Last one from me, Joel Greenblatt, author of The Little Book That Beats the Market. Highly recommend if you haven't read it. Runs the fund Gotham Asset Management. I'm just going to read you his top 5 holdings. So top 5 holdings: Apple, Amazon, Microsoft, Alphabet, Facebook.
Yeah. Nothing surprising, but also, again, to reiterate what we've been saying, it doesn't feel like there's a magic formula here in terms of...
Is that pun intended? Because he used the magic formula. But I think the thing is, if you look at what strategies he runs, his biggest fund is like an index plus fund where he basically tries to replicate the S&P 500 index and then puts his little touches here and there. So that's why they're the biggest 5. So just if you're going to look at these filings, just make sure you then look at the strategy that's behind the filings. Yeah.
So there you have it. That is that brings us to the end of our episode on who is buying what, 13Fs. If you are interested in finding out more about 13Fs, we will put some of the links to the websites that we've used to get this information, and you can go and have a dig and have a look at what some of the biggest fund managers in the world are doing. As we said, don't use this as your own one and only means to take investment ideas. Do your own research, but I think the main message for me, Ren, is that you see these guys who you think are incredibly smart, which they are, and going out and finding all these hidden gems among all the stocks out there, but at the end of the day, they're buying just what you and I are buying, and unfortunately, we're not the billionaires like they are.
No. They charge fees on billions of dollars of assets under management.
Yeah. Look, I think it's encouraging at the end of the day. If we were to look at their portfolios and find all these companies that we've never heard of, or that they've done, massive amounts of investigation to find, then you might think, okay, well, this is not for me. But the fact that some of them are just holding your classic ETF is reassuring.
Yeah, that is a strange one. S&P 500 ETF, an international equities ETF, and a gold ETF.
Yeah,
it's like that's a core portfolio. Like that's a set and forget portfolio.
Yeah. So that's brings us to the end, but just a reminder that Equity Mates doesn't stop here. You can email us at contact@equitymates.com. You can follow us on social channels or visit equitymates.com for more information. If you're stuck for podcast recommendations as well, please remember that we have the Get Started Investing podcast for all those beginner Buffetts. And we have 2 that have just launched, Comedian vs. Economist and Meet, Pay, Love, both very well worth listening to. So go and check them out. But Ren, always a pleasure, and we'll chat next week.
Can't wait.
Thanks for listening to Equity Mates Investing Podcast, a production of Equity Mates Media. Please remember that everything you hear in Equity Mates Investing Podcast is general advice only. The content has been prepared without knowing your personal objectives, specific financial circumstances, or goals. The host of Equity Mates Investing Podcast may maintain positions in the companies discussed. Before considering any investment, please read the product disclosure statement and consider speaking to a licensed financial professional.